Welcome to Markets Now. I'm Michelle Rook with Mike Miner, Professional Ag Marketing, and we have kind of mixed trade in both grain and livestock futures this morning. And Mike, I guess let's start off talking just a little bit about the grain trade, starting off in soybeans, because yesterday we had a strong close. Certainly, that was on the heels of maybe easing trade war with China. But boy, that thing is on again, off again, isn't it?
It really has been. The soybean market's had a really difficult time sustaining any significant rally at all. And a big part to do with that has been the back and forth administration, any news changes. I mean, yesterday we saw Trump come out and basically played into China's hand a little bit. China last week had came out and said that they wanted Trump to be respectful in any trade negotiations. And Trump came out yesterday and said, he was expected or going to be very nice in his talks. And he said the tariffs will drop. They're pretty high right now, but they're not going to completely go to zero. They'll keep their unilateral tariffs in. And China came out kind of on the overnight this morning and said, you know what, that's not good enough. No talks are happening, by the way. And yeah, we expect zero. And so the soybean market might not like that a little bit after what seemed like yesterday was a little bit of de-escalation, I guess, if you could call it that, Michelle.
Yeah, but Mike, the soybean market held up better than I thought it would during the whole escalation of the trade war with China. So what's holding it up? Is it the thought of lower acres? Is it maybe some underlying demand or what's going on?
Well, I'm a little surprised because I thought the funds initially, when we would have started a trade war again with China, we saw it the first time in his first administration, at least. I thought the tariffs are pretty noted to be bearish on soybeans. So the funds haven't reacted as negatively as what I thought they would have. And a couple of the reasons why. One, last time they waited until about midsummer to really push the market down, especially once they realized we had a crop. Two, at this point, not like all the buying has stopped. It's a new crop problem. Old crop,
Right.
they're almost all shipped. The majority of the sales are done already, so it's a new crop problem. So that helps as well. And then three, it's acreage. You're going to have some pretty low soybean acres this year, especially with the faster planting pace in the Western Corn Belt. We'll see how the East goes with some of the rains out there being quite aggressive. But nonetheless, at this point, we haven't had any weather concerns quite yet, but we have a lot to trade until we really have a made crop. So a few things kind of holding it up there, and then any hope for negotiations going forward. But at this point, it seems like China and the U.S. have definitely in the camp of the waiting game.
For sure. And China's been buying a lot of Brazil beans. I know their basis levels have gone up, so that probably helps support our market just a little bit here. All right, let's talk about the corn market. We've had such strong demand there, but the market is now shifting more towards the supply side and maybe some concerns about these big acres.
Bigger acres a little bit, and then at this point we do have some fresh news that's maybe helped support a little bit, or maybe could support, that's getting tracked. We've sold off pretty aggressively after we hit some resistance last week at 470. There's a heck of a lot of contracts sitting right at 470 to still be sold, so that's a pretty good resistance area to break through. And now they're focusing on a little bit of a northern China dryness problem for their crop, which they are one of the top corn producers in the world. So they do matter. That's going to keep a close eye on that. And then also, the slower planting pace out east, we're going to want to keep an eye on Illinois, Eastern Iowa, Indiana, just on their planting pace out there. The West, it's going quick, but the East, there's still some question marks with rainfall there. Very, very early yet. Typically, we don't trade a lot of planting progress until probably into May, it seems like most years. So a few things that the market's starting to focus on, but at this point, going nowhere really fast at this point with pretty big volatility in both of them.
Yeah, and corn has been down like the last 4 days, so you would expect a little bit of a maybe a short covering pop here. Like I said, demand has been good there. Exports, 45.5 million bushels this morning, so not bad. And ethanol production was decent yesterday, wasn't it?
Yeah, and for this time of the year, it's very normal to see ethanol production really drop off. from here on out. So I'm expecting that still. Stocks have been very, very high and holding at a very high level. It seems like that's about capacity. But demand season's right around the corner. That'll be nice to see that pick back up, I think, Michelle.
You bet. So corn and wheat have invariably kind of been anchoring each other as well. And of course, the wheat market is back making more new contract lows in Kansas City wheat this morning. Is that all about weather? Because it just seems like we can't get any traction in that market.
That's been a tough one. I think wheat historically is very undervalued at this point. The weather is not helping this recent sell off. We broke through some major support levels on the wheat market, especially Kansas City. There, that one I've been focusing on a lot lately. So we've broke through some very key support levels, likely from a lot to do with Southern Plains weather improving. Going forward here, we're getting into a time of the year now where we have a strong seasonal upward trend for about a month on that wheat market. I'd like to see a little bit of a rally there yet, but at this point, that's been a very easy commodity for the funds to stay short on, and that's been a difficult one. As for what our dollar's done versus the rest of the world as well, we have very, very cheap wheat to export. So I would like to see some improved buying there for sure, Michelle.
Right. Yeah, you make a good point about the dollar being down here, as we've just bounced right off of those contract lows here recently. Okay, the cattle market. We're kind of consolidating a little bit today here, it looks like, at least to start. But that cattle market made new contract highs in the live cattle yesterday. What's the next move for this market? And is it all dependent on what the cash does?
Well, we're a couple bucks away from some very strong resistance levels on this cattle market from the old highs, kind of trending upward. So you're getting right back up to that spot here. Some very impressive trade nonetheless. I think cash has been a very easy answer to say that's why we've pushed up here again. It's been quite resilient, especially last week's cash. It was a little bit more than surprisingly strong. This week, they're probably expecting a little bit more strength as well. Not a lot done yet in the cash market, but they are expecting some higher traded levels. And so money flow has been back into this market. I think if you look at like the Bloomberg Commodity Index, you can see that we've had a little bit of a recovery there, whether it be the grains or the cattle market or hogs, or even crude oil for a little bit there. It kind of bottomed out last week and kind of ran up until the end of last week. So getting a little bit more money flow back into this. Demand's very good yet on the cattle market, surprisingly. The funds have added some probably versus the last commitment of traders report as well. So that'll be interesting to see what tomorrow's CFTC report comes out with. But at this point, we are probably seeing some early signs of heifer retention, something to keep an eye on there. The cattle on feed report that came out showed that the heifers are starting to drop for the on feed number, a percentage of that. So that's something I'm really focused on. And other than that, supply side hasn't really changed. We're not short on supply. Weights are still incredibly high, and imports are very impressive in Jan and Feb, but been dropping off a little bit here, just as we normally see, Michelle.
But Mike, how impressive was it to see the funds basically stay over 100,000 contracts long in the market, considering the big correction that we saw in the S&P?
Yeah, I mean, you saw a 20% correction in the S&P, and the funds continued to stay pretty long on the cattle market. And that's really surprising because you're at record high levels. It's been a very well-sustained rally for the last 4 years or so. I mean, it's difficult to say that at some point the funds aren't going to wake up, have some real concerns about the stock market longer term here, and say, you know what, if the stock market's going down, the cattle market usually follows that quite aggressively, high correlation. It's going to be surprising if at some point the funds don't wake up and just say, today's the day, I'm getting out of the cattle market. Demand concerns further out are too great. And they haven't done it yet. Maybe if they get a glimpse of a fundamental picture weakening, but we haven't seen it yet. And I'm very surprised by that.
Yeah. And just to clarify, when we talk about these contracts here scoring new contract highs, these are still below the levels where we hit the all-time highs, right?
Yeah. Yep. But I mean,
Yep,
really, at this point, been on a bull rally up to here for quite some time now. So
for
it's
sure.
been a well sustained rally with very limited corrections. I'm still looking for this to appreciate a little bit. I think there's still some levels we could have taken out, but at this point, it's just going to be when the funds decide to pull out.
That is for sure. All right, the hog market seeing a little pressure here today. Is that profit taking, or talk about pork exports this morning because they were what, a marketing year low?
Yeah, and the pork exports were very poor this morning. They were more poor last week as well, not quite as bad as this week. But versus normal, the last 2 weeks have been down at least. And cutouts heading the wrong way, it looks like. Last night's report was quite disappointing on cutout. So at this point, I'm getting to that time of the year where I really want to see a nice advance in the cutout, at least by the middle of May. If we aren't advancing on this cutout higher, there's going to be some really big concerns about sustaining 100 type futures levels in the June and July contracts. And futures have some really nice premium back in them. The corn market's dropped as well, providing some nice opportunities further out. We're not quite there, I'd say, in some of the Q4 contract months versus what some of the producers would like, but it is getting very close, Michelle.
Let's talk again. I know you and I talked about this the last time we visited about China and the percentage of the export market that they are, I guess, consume. But we had cancellations this morning from China. How concerning is that on the export front?
Well, I think one of the bigger concerns with China is that what they buy is a very lower ended type cut, a lot of offal type things. So if they are not going to buy that, it puts the packer in a tough position. How are they going to react going forward? Can they do anything about it? That was kind of a bonus for them going back in the last few years. But China really likes some of those cheaper cuts, and no one else really buys them at this point. So that's an important point, I think, when it comes to Chinese demand for our pork market. I wouldn't consider them to be a huge buyer for some of the higher end cuts, but they do make up a decent portion of our production yet. It's not as big as they used to be, but yeah, at this point, really, we need negotiations to go really well for us on the soybean side, and then some of the other things like pork and then beef. They buy some of that as well from us.
Right. Can you also speak to the cash trade right now? Negotiated prices are actually above the formula prices, which is usually kind of a positive sign. Is that lighter numbers? Is the demand that strong? What's going on there?
Yeah, cash is really hot right now. Going forward here, it really just looks like Packers are going to have to cut the kill if cutout doesn't start to rally here. So that's kind of the position they've been in. But at this point, it looks like the cash markets had a really nice run, and that's probably why we've been able to make this the recent futures run as well. Is that fundamentals looked pretty decent, but if we don't get that cutout to correct soon, the Packers won't have much of an option but to cut kills, I think, going forward, Michelle.
Yeah. And obviously, that's a function a little bit of demand, I would assume. And so, what is domestic demand looking like for pork right now here? And can it make up some of the shortfalls with these exports falling off?
It's trying to, and weather has been pretty nice for the most part. Grilling weather is coming up, so a lot of high expected anticipation for that. If people do start to eat less steak, for example, usually pork is kind of a benefactor from that. If people start to tighten up the reins on their expenses and eat at home a little bit more, we really learned that through COVID and purchasing more smokers and things like that, and the average, especially Midwestern American, is definitely become more accustomed to that. So that's kind of where we're heading towards here. But so far, the grilling weather has taken off pretty easily for this hog market domestically.
And Mike, we do have a monthly cold storage report out, I think this afternoon. Any expectations for either beef or pork there?
It's pretty tough to get that one to impact the market at least or trade at this point. So I'm looking for disappearance. I'm looking for anything building, but really the cold storage report shouldn't throw me for any big loops unless they're maybe a couple key items. But otherwise, I would expect it not to have much of an impact on the futures trade going into next week.
Yeah, it never does. I know we dig into it and try to analyze it, but it really doesn't have a lot of impact, unfortunately. All right. Thanks so much, Mike Miner with Professional Ag Marketing, and that is Markets Now.